Let me ask one question before we begin. Let me ask one
Okay.
question. If I were to speak while Jim's speaking, am I going to interrupt him, or do I need to have do you need to turn mine on for me to comment?
No, you're
We're all
live, so
live,
you can interrupt him whenever. Yeah.
Very good.
and
Very good
and
then.
feel free to do that.
Actually, Jim, I just wanted to make sure I could do something in regards to the initial, just a disclosure statement. That's
Right,
all.
right. Okay, we just hit the top of the hour.
Okay. Opening the room.
Let's go.
Okay. Welcome everyone to the webinar. We're all excited to attend tonight's special webinar. We see a lot of people coming into the room, so just bear with us a couple of seconds to let everybody in. And okay, we've hit the top of the hour, so just to let everybody know that we're going to record this special event. So anybody who cannot attend will be able to review it tomorrow. It will be sent out in an email and it will also be posted in your back office. You can also send it to your prospects if you wish to give them a little bit of information about our products at Longevity7. Okay, so we have two very special presenters today. Jim Yarborough, who is currently the owner and president of his own consulting company. Jim provides CFO, senior management services, business development, and financial consulting to international financing firms, along with guiding business owners in developing their long-term investment strategy. His expertise includes providing customized investment advice for individual clients. He has also provided estate planning, retirement planning, and overall financial consulting to clients with specific guidance on full spectrum of solutions for their short and long-term financial needs. At various points in his career, Jim has been involved in business development for institutional and high net worth clients with a wide range of financial objectives. Jim has a well-rounded experience of high finance, both in academic and practical sense. He is passionate about these topics, and together with his dry sense of humor, which we love, it is very easy to absorb the information Jim will be presenting this evening. And then to follow, we have Livio Nespoli. And Livio is the founder of InterAnalyst, and that is a financial publishing company located in Nebraska. For over 28 years, he has taught both professional advisors and amateur investors the history of gaining wealth. His amazingly positive outlook always overcomes current pundit views of dramatic challenges and negativity. Since 1995, his newsletters and software have guided investors in more than 23 countries globally. Lend him your ears tonight and forever change the financial destiny for yourself and your family. With that, I will pass the mic over to Jim. Jim?
Very good. Thank you, Carmel. And Livio, thank you for being with us here tonight. We certainly appreciate you being involved in part of our team. Everyone, what we're going to do is go over our products, our financial education courses, and we hope that it's informative. We're going to, for the most part, skip across the top, the 50,000 foot view, because this is really not the spot for us to do the in-depth as far as all of the knowledge that our members will be able to receive when you get our products. But what we're going to do is give you kind of an overview of what each of the lessons or each of the courses contain, and so that as you go from lesson 1, 2, 3 all the way through, at least you'll have some knowledge prior to you getting into each of those courses. Myself and Livio, we spent several months putting together the education that is contained in these courses. Between the two of us, we have over 50 years of investment experience. working with individuals and institutions at every level of knowledge. And so where we believe we come from a spot where we can be educational, and that's more or less what we're going to do here. And Livio, as far as the education only side of this, do you want to kind of jump in there and give a bit of a disclaimer here?
Yes, I do. I think it's important, and first of all, I want to say that I appreciate being a part of this, and the people involved in this are extremely kind. I've attended the seminars that we've had here. They're brilliant. I've just enjoyed my whole relationship with the longevity team, so I'm honored to be part of this, and appreciate the invitation to even partake in this, Jim. So just want to let you know that first. The presenters herein, us, and those that might speak on this seminar tonight, we're not endorsed or connected in any way to any government agency or organization. There's no specific investment advice that is ever intended here. Financial products can vary. Therefore, we want to always, as individuals, examine the details of the product and structure. We're not making any investment advice of any particular investment tonight. So please consult with your professional advisor, no matter what the investment is, before you do that. And that's really it. Jim, go ahead and I'll take it back and give it to you.
Okay, very good. The key part of that is that what Longevity7 is providing is financial education. We're not making specific recommendations. And so from our perspective, it's all about bringing a certain level of education to our members. Now, this happens to be a fairly passionate area in which I have, for the length of my career, I've always felt that it was important for people to understand how economics, investing, finance, all of those things come together. And most importantly, how do they affect each one of us? And whether you feel it directly or indirectly, economics, investments, and the finance, the way that finance works in your life, it does affect you every day. And so what we've done is, in a we think thoughtful way, what we've done is come to provide you a certain level of information that will make you a better educated consumer, is what we ultimately hope. And so what we're going to do is we're going to talk about a little bit about the mission that Longevity7 and its management and its consulting team has put together. Most important is educating you on a working knowledge of the political, economic, and banking decisions that are made every day around you that impacts your life. And most important, it's how does that information, the basics of that information, how does that help you in your personal financial health? And what we'll be discussing is economics, finance, investing, what is my risk tolerance, some of those types of things as we go through this and as you go through the courses. And again, we are just touching the summary of each of these, but as you go through and you acquire these courses, we believe that they're going to be very impactful in your understanding of how the investment world works. Most important at the bottom there is understanding how these influences impact your money and those decisions that impact you specifically. So what we're going to do is go through each one of the courses. I'll go through relatively quick. We will have a question and answer at the end. Livio and I will have some discussion back and forth about a few key components here, because both of us were very hands-on in putting this together, and so we can both contribute as to the information, and certainly in the question and answer phase, questions for either one of us is very appropriate. The first one, and this again goes back to the kind of where my passion lies, is understanding the economics that goes on around you. And if you understand one simple concept out of this first course, the law of supply and demand, if you get that particular concept down, you can understand 80 to 90% of the economic activity that's going on around you. Whether it's the price of a barrel of oil, if it's the price of food at the grocery store, if it is the volatile price of gasoline that all of us experience on a day-to-day basis when we go to the pump. The fact is that there is a certain amount of supply in the market at any given time of whatever that good is. It can be homes, it can be real estate. We'll get to the real estate in a minute, but it can be commodity type things as going to the grocery store and it's butter, it's bread, it's milk. Those types of things, the price of that product gets impacted by the law of supply and demand. Obviously, the more supply there is, if demand stays the same, prices will come down. If there's a greater demand of a certain product and there's a limited supply, prices will go up. That's why you see whenever there's some sort of activity that happens in the Middle East, then that impacts the price of oil. It's a really simple concept once you get down that law. In the first course, the items that we go over is as you can see, an introduction to economics. That's kind of the 50,000-foot view of all the things that go into an economy, buying and selling, that trade either inside a domestic economy or internationally between countries. World economic events that impact that trade, how do markets work. One of the items that I hear most often is, how does money and banking actually affect the economy? And we'll get into a fair amount of that. And as many of us look at currencies and the sensitivity of our currencies, if you understand what a fiat currency is, the difficulty is that many or most countries went off the gold standard over the last 30, 40, 50 years. So in effect, what's happening is that we have fiat currencies that are only backed by the pure taxing authority of that country, or the full faith and credit of that country. There's not really anything that is a physical asset that backs those currencies. Once you begin to understand that, it may create a little bit of anxiety in that once you have a more in-depth understanding of it, but at the same time, I don't think that any currencies are at risk at this point. There are certain countries, such as Greece, that may have to move away from the EU for certain reasons, but currencies are the lifeblood of how an economy works. So then in this course, we also then go into how the global economy functions. That's trade between countries such as the United States and China, China and Japan, China and Europe, Europe and Asia, other places in Asia. Equally important is how are government decisions impacting all of these markets. So as you go through course number 1, those are some of the things that you'll learn about. Now here,
Jim,
in
before we go on, can you go?
Sure.
Can you go? Would you mind going back to that slide for a second? I just want to touch on something here. The beauty of this course, I think, is that you not only learn these things, but you gain enough knowledge within this course to utilize the techniques and those things that are taught within the newsletters. It brings the newsletters to life, and therefore by using these types of tools, these courses, you can become more aware of what's happening and thus do the most important thing in your life, and that is take advantage or benefit from information. And that is the key here. It's not just information to read, it's information to take advantage of. And as I always like to put, when it comes to economics, it's very, very, very vital that you understand the interrelationship of economics on a global scale. Because once you do that, you can put the economy into your pocket. And that's what I like about these courses that we've developed, is that these courses put money in your pocket and help you prevent money from exiting your pocket. And ultimately, that's what these courses are about. That's it, Jim. Go ahead.
Okay. All right. Very good. The next part of the first course is we do go through the market cycle. And as many of you have felt over the last couple of years, you can see where economies go from a peak down through a recession. It's then called a trough. That's just an economic technical term. And then what happens is you can see the recovery that will happen over time. Now, the way that governments impact this overall growth trend, and they always want it to be in an upward slope, that means that economies are growing. The way that they impact these is that as you're at a peak, there's two main things that central banks are responsible for. One is full employment, and the other is to reduce inflation to a manageable level. The problem is that when you get to a peak, the fact is that there's a lot of employment, there's a lot of money in the system, and that by its nature will cause inflation. What central banks will do is begin to slightly increase interest rates to slow the economy. If they do that too much, they call that tapping on a brake. If they do it too much, then you begin to take money out of the system and you come to a recession. Now, as you come through to this area, which is a trough, what they will do is begin to reduce interest rates, sometimes significantly, which is the situation that we currently have in the United States, is reducing interest rates almost to zero, trying to influence small businesses and large businesses to expand, increase employment, buy technology, increase plants, and so forth. That will then bring you through the recovery stage, and of course then you go through this whole cycle again to a peak situation, and the whole cycle begins over again. Now, this is the analytical or intellectual side of a market cycle. But let's go over and take a look at the emotional side that all of us go through when these cycles move up and down. Obviously, as jobs are being created, we're all feeling good about things, and when you get to the euphoria stage, that's typically when things such as the stock market, Dow Jones Industrial Average, or the real estate market, everywhere you go, people are talking about the market, the value of their homes, and those types of things. Normally, the common wisdom is when you start hearing about markets everywhere you look, that's probably a good time to start cashing out of them. And certainly when in the business papers they're talking about the increase of the value of homes on a weekly basis, that's probably a pretty good indicator of when it might be a good time to be getting out of that market. Obviously, this is where we were back in 2005, 2006. As the market begins to move down, these are all the emotional indicators of where you might be in that market. Now, where we are today is that I believe we're somewhere in this area right here, where we're headed through hope, relief to optimism, and that's of course the optimistic side of me. But as long as they keep interest rates down, what we should continue to see is this upward growth trend in our economy. Now, there are many different variables that impact all of this growth trend, and we'll discuss that throughout through the courses also. I thought this was a very insightful comment by Robert Trout. He's a news broadcaster back in the Walter Cronkite days. A successful society is characterized by a rising living standard for its population, increasing investment in factories and basic infrastructure, and generation of additional surplus, which is invested in generating new discoveries in science and technology. If you look at this comment, what you see is the making of an industrial revolution. The United States went through this industrial revolution 100 years ago. If you look over the last 30, 40, 50 years, you see Japan, you see South Korea, and certainly you see today China going through all of these phases where you have a rising standard of living, which obviously increases the overall economy of that particular country. You have the growth of their factories and their infrastructure. That's what helps to make economies happen. In the United States, one of the most important infrastructure one of the most important infrastructures that were put in place was the road system that the Eisenhower administration put in this country. It originally started out as a military infrastructure, but of course it has turned into moving commerce up and down that highway system in a very fluid and efficient way. That's how you build economies, and typically that infrastructure is one of the most important things. From here, we're going to go
Jim,
into...
I want to add, you can
Yes.
go back for just a second, please,
Sure.
if you wouldn't mind going back. One thing I want to conclude here, and you precisely nailed this, and I'm finding that the transfer of this information that you're learning here from Jim, this economic cycles, this characteristics of a rising living standard, of growing economies, when you look at this, you have to understand that these things don't all happen in one spot in the world. They're happening at different stages in different countries at all different times. So the way you take advantage of these situations, or profit from these situations, or avoid the fall and loss, is by understanding where they're at. Knowing this information is powerful. It offers you the opportunity to seek that which you look for. Do you seek profiting, or do you seek the avoidance of a decline? Knowing this economic situation in a particular country, as he's showing you right now, will give you that knowledge. One thing that I do want to add about the newsletter, the second newsletter, which we'll talk about later, we give that information in that newsletter. So as you learn within these courses, we will be able to provide you the information within each country of where they're at economically, and therefore how you can benefit from that information. So in concluding, what Jim is saying here is that the reason this information is so studied and so powerful is because that you can benefit from it. And that's the key to it, is benefiting from the information, converting that information into profits or the avoidance of loss. Go ahead, Jim.
Very good. Okay, and that's an important concept. Here is that this is the trend line of one particular domestic economy. The fact is that as many countries as there are around the world, there is this type of activity happening in each one of them. And so being sure that you understand what economies are growing, they typically talk about the BRIC countries, Brazil, Russia, India, China, and those many of those are emerging economies that are happening at a significant growth rate, and understanding where they are in these cycles is what can allow you to prosper financially from it. Again, Mr. Trout, I thought that was a very wise comment there. Now let's move over to the finance, time value of money. Again, this is a very passionate area for me. Time value of money, from the definition or the concept of that, is that if I have funds available to me today, they have more value to me because I can simply invest those and they'll have a greater value somewhere in the future. Now, what do you do with those funds in order to make them grow over time? This course will go through understanding of stocks, bonds, mutual funds, and simply mutual funds from the side that you have a managed professional money manager who can invest that money for you. That's what a mutual fund is. Or a passive investment through an index fund, the Dow Jones Industrial Average, S&P 500, NASDAQ 100, the FTSE or the DAX. FTSE is in the UK, the DAX is German. Now, the importance here is understanding how these would fit into a portfolio, how you would use each one of these types of instruments in building your portfolio. And then for some people who, depending on where they're at in the spectrum of conservative, moderate, or aggressive, may simply feel most comfortable in investing in savings accounts. And that's perfectly fine, but you need to understand the risk associated with a simple passive savings account too. And the biggest one, of course, is inflation. Now let's move to, I thought this was, hello, are we there?
Yes, I'm here.
Okay. Boy, I just heard something that sounded odd. In the value
I
of
like
money.
this slide a little.
Yeah, this is a good one. And more or less what this is said to me was that here's a young man speaking with his dad, and he gets the fact that he has an understanding of the value of one currency to the other. And the dollar, of course, is always in flux, and now it has many positive attributes, sometimes With lower interest rates, it causes it to move down in value relative to other currencies. But I just thought that this was a kind of a whimsical way to talk specifically about currencies. The other part of the time value of money in this particular course is we go through what types of retirement accounts are out there: 401ks, IRAs, and Roth IRAs. The first one, I'm going to just get on my stump for just a second, is that 401ks, which are employer sponsored, in that we've moved away from, in the US anyways, from the typical company sponsored pension plan to 401ks. For anyone that has access to a 401k, for the most part, your employer will match you dollar for dollar up to a certain percentage of income. So let me just give a real quick explanation of that. If you earned $50,000 a year and your employer matched you up to 4%, so you could put away $2,000 into your 401k and they match you dollar for dollar, the first thing you need to understand is that that's 100% return on your money. That 4%, putting away that $2,000, they're going to match you. Now you already have $4,000 invested in that given year in your 401k, and that's before you've invested it in anything in the market. So I will encourage anyone who has access to a 401k to maximize the amount of money that you're putting into that 401k. And the other side of this is those are before tax contributions, meaning that they actually take those funds out prior to calculating your tax. So there's several benefits to a 401k. The other item is self-directed IRAs, and this is where your employer may not provide you with a 401k, but you have the ability to take funds and put it into a self-directed retirement account. We go into depth about all of these, but the other one that is equally important is a Roth IRA. In the United States, this came about in the last 12, 13 years. A Roth IRA, you can take any dollars that have been already taxed, you can move those into an IRA. There are certain parameters as to how much you can put in there, but the investments grow tax deferred, meaning you don't pay anything on those gains until you take money out. Or actually, sorry, you don't pay anything on those assets because they grow tax deferred, and because you have already paid the tax on them, there is no tax when you take a withdrawal either. Huge benefit to anyone that has maxed out some of these other areas. You can still put money away into that Roth IRA. And the most important thing that you want to understand is that...
Jim, excuse me.
Yes.
May I add something here just real quick before you get into the taxes, the most important part here. The one thing that I'd like to add here is these retirement accounts, whether they're 401ks, IRAs, and Roths, fall under an umbrella of tax deferral or tax avoidance in a sense. They fall under an umbrella that allows the money to grow on a tax deferred basis. It's a substantially beneficial point of view. Another thing is that most of these, because they're umbrella-like, allow you to hold various types of investments. You can put in mutual funds, you could have stocks available to you, you can even have gold, you could have silver. Many different investments fall under the umbrella of this retirement account. So with all of these investments, and whether you move from one mutual fund to another or any transactions, those transactions also avoid taxation along the ride because they fall under that umbrella of tax deferral. Go ahead, Jim. I just want to let you know.
And thank you, Livio, because the thing about it is the fact that you're not paying tax on the current gains that you make increases the compounding over time. And we go into a fair amount of depth as to the benefits of that tax deferral. So those are some huge benefits by putting funds away into any type of retirement account. Then we go to the next course, which is investing. And this is what we do here is we begin again with a high summary of what are different markets, what are large cap stocks, what are mid cap stocks, what are small cap and international, and then of course what are mega. What a mega capitalization stock is one that has $50 billion of value, market value, or above. Some examples of that: Microsoft, GE, Apple, Cisco, Walmart. Most stocks in the Dow Jones Industrial Average, which there are 30 of them, are defined as mega cap stocks. We go into defining each of these. So again, whenever you might be reading something, you hear it on the news, you at least have some level of understanding of what that broadcaster might be saying. And so you're going to get more out of that story. So this education is going to also help you to get education in other places that, if you pick up a money magazine and you flip through, you're going to already be exposed to many of these concepts. So it'll be easier to understand whenever you might have a few minutes to go through that information. As far as capitalization, just to do a quick bit of math here. What you do is let's take Microsoft as an example. Today, the stock closed a little over $30 per share. They have 8 billion shares out in the marketplace. You take the $30 market price times the amount of shares that they have in the market, and that is their market capitalization. Today, their market capitalization is roughly $248 billion. So again, a mega cap stock. These tend to also be termed mega cap and large cap, are what people use the terminology of a blue chip type of a stock. One is that they're large. They typically have dividends. They're somewhat predictable as far as their income and their earnings on a regular basis, and so they're much more predictable as far as the volatility. As you go down this list to mid cap and then to small cap, you will see that there are indexes. The Russell index, which is mostly small cap stocks. It tends to be a little bit more volatile, but in certain market cycles, they also have greater returns over time. And then international stocks, everyone should have some part of their portfolio invested in international stocks, because we're now in a smaller international economic, finance, and investing world. So there's multiple markets that you can be invested in. And examples of that is Toyota, Nestle's, BMW, large names all of us know in the economy every day. And so there are a lot of stocks out there that would be household names. The other thing that we go through in this particular course is what is an ETF? What are equity mutual funds? What are bond and hybrid mutual funds? We go into depth in each of those so that you understand what that language is about. And equally important is understanding risk. And that's a huge part of what we believe is important, because you need to understand the type of investor that you are: conservative, moderate, or aggressive. And you'll see in just a minute that we have some information that can help you to determine that. Here's the next part that I thought was rather interesting. Is on the left, you can see this is the New York Stock Exchange back in the 30s. This is current day New York Stock Exchange. As you can see, not a lot has changed other than the fact that there were a lot more people that did those transactions in the past. They're called floor brokers or market makers. And what they simply did was they had buyers and sellers that would stand at any of these podiums, and let's say at Cisco or Microsoft or GE, there would be buyers and sellers at any given time. That's what makes a market, is buying and selling. The fact that we have up-to-date information on a regular basis, and that market maker was helping to make it a fluid market. Now that's the way that it was back in those days. As you can see, not a whole lot has changed, except that we now use mostly computerized trading. In the New York Stock Exchange, it's called the super dot system, and that's what does the automatic buying and selling between people who you would go into an Ameritrade or E-Trade or a Merrill Lynch account, and you make that buy or sell. The fact is that it's all automated now, unless some specific news comes out, or if it's an IPO or a secondary market or something like that. Most trading today is simply done on one of the computerized trading floors. Now let's go to something that it also has a huge impact on your investing style. And these are some of the concepts that people need to understand. What type of an investor am I? For right brain thinkers or intuitive investors, a lot of the things that impact how you might invest are fear, or greed, emotion, and risk tolerance. Fear, that's a rather obvious one. Greed, let's go back to the famous line by Gordon Gekko, greed is good. Well, I think that all of us know over the last 10 years, certainly, that all greed is not good. Look at Wall Street. I'm not saying that all people that work on Wall Street are greedy. They all work in a capitalistic society and work to make a profit, yes. But the thing is that greed is something that does drive and motivate people. Is it good? Yes. Is it sometimes bad? Yes. So these are some of the things that you need to think about. What type of an investor am I? Now you go to the other side, the more analytical side, where people will sit down and say, okay, where am I at financially today? What are my financial goals going forward? Am I looking to buy a second home? Am I trying to educate my children? Do I want to buy a new car next year? Do I want to buy a bigger house? Do I simply want to save for retirement? Those types of things you need to sit and make some sort of determination, some sort of a plan for you over time. Then also in this investing piece, the other thing that we go through are IPOs, initial public offerings, secondary offerings, and then we go into the key components of bond offerings.
Jim, may I interject something here while
Sure.
we're here? I think we have some points here that I can make. We know on the right side there, it talks about the IPOs, the initial public offerings. We all know recently about the Facebook. We all know what happened to Facebook and what's happened since, and that comes into play. And some of the many reasons that it dropped come from the right brain. It's the third one down, called emotion. And in that case, emotion builds on itself, and people get nervous. They fear then comes into play, and they start a sell-off. That may be justified, it may not be. I'm not talking about that for that right now. I'm just trying to give a point that these are very valid points in your investing. One thing that can help balance fear, greed, or emotion and risk tolerance is what we learned earlier in the economic cycle. If you're in an economic cycle and a stock may be flying, and you see that in reality that this economy is not really one that's going to support a flying stock, you then can emotionally balance yourself, because you're in a different position economically in that country that might say, well, maybe I shouldn't go with this as long as I thought I was going to. I should preserve my wealth out of this investment, because in this economic cycle, it looks like it's getting ready to turn down. So these are very, very vital, and they have to be balanced against the economic cycle that you've learned in another course. So these courses build upon themselves consistently and in a way that allows you to learn, balance your emotions against the reality of economic cycles within the country, so that you could take time and grow your money properly in a very, very, very emotionally controlled environment. Go ahead, Jim.
Okay, not to get too much into the psychology of all this, but one thing that when you're investing for yourself, just one concept that I had learned, a good 15, 20 years ago, was always do your analytical side. Determine what types of things I might want to invest in. Look at them. If it's if it's Microsoft, GE, or if it's a bond fund, whatever the case, do that analytical thinking. And then once you've done that, then you might want to go over here and say, okay, how do I really feel about that? And just as a backup to what you're seeing on the analytical side. I always thought that was a good way to balance these two pieces in your investing life. So, okay, now we go on to the next piece, which is the investment principles. In this particular course, we talk about two things that are two of the most important aspects of investing. One is diversification, and that is being sure that you are set across many asset classes that have different characteristics, because in that market cycle, what will happen is sometimes stocks will be moving up and maybe bonds will be moving down, and the counter of that will also be the case, in that bonds may be moving up and stocks might be moving down, or some other gold or silver or some other, even if it's art. There are certain cycles to every asset class. And so what you need to do is go through the section on diversification. Be sure that you're very comfortable with that particular piece of the course. Then as you go through asset allocation, the things that become important here are, what are my individual goals? What's my risk tolerance? And equally important is, what's my time horizon? If I'm a 25-year-old person and I have the next 40 years to put money aside, it's a matter of having a good solid plan and over time being sure that I consistently invest that money. And as you do that from a young person, if you have those funds in that retirement account and you're doing all tax-deferred investing, just think about the amount of money that is going to be available to you at 60, 65, or 70, simply because I put that money away, I have it available for my retirement, and most important, all the gains that I had over that 30 or 40-year period of time were not subject to tax because of the way that the rules work in the retirement in the retirement code. So if you go from that perspective, then long-term investing is just huge if you understand it conceptually. And then what are the main asset classes are equities, fixed income, cash, and then of course I would add real estate to this as one of the other key components. Also in the fourth course, there is an investment personality test. There are roughly 25 questions in there, and it's going to help you get comfortable with the type of investor that you are. Again, it's going to lead you to, I'm a conservative investor, I'm a moderate investor, or I'm an aggressive investor. And many times that's a matter of, what am I comfortable with as far as how much risk am I willing to take for the reward that I'm ultimately expecting. And also in number 4, in the investment principles, we do have this information which gives you this is a very generic portfolio model. Here is for conservative. We also have in there one for a moderate investor, and we also have one for an aggressive investor. And what you'll see is that it just depends on how much fixed income, balanced funds, diversified funds, and how much you might have in the way of sector funds. And sector funds do tend to be the area where you can increase or decrease the amount of risk that you're willing to take in your portfolio. So as we go through each of these, you'll have access to this allocation and the thinking that goes behind it, and equally as important, the being able to take that short little exam that will let you know what kind of an investor that you are. Now we go to the real estate investment trust. This particular course is also dear to me in that I like real estate. I think we're certainly in the right spot as far as the market fluctuations of real estate, that we're closer to the bottom. And what that means is that we're in a position where we might be buying at a discount to the market and building a portfolio. Now there's 2 types of real estate investment trust. One is a public REIT, which means that it's traded either typically on the New York Stock Exchange, and they have different criteria as to what type of properties that they might invest in. Or, of course, they can be a REIT that just invests in mortgages. But there are certain tax advantages that you get by being a registered real estate investment trust. And again, they can be a public REIT or they can be a private REIT. And in the relationship that we have at Longevity7, we're working with a group that invests in commercial, single and multifamily housing, medical office buildings, and retirement centers. So that particular relationship, we believe, is going to be very advantageous as to people who may have an interest in investing long-term and in something that is physical, such as real estate. In a recent Smart Money magazine article, Warren Buffett, who's the chairman of Berkshire Hathaway, he stated that, I wish I could buy a couple 100,000 single-family homes. Well, for anyone on this call that knows Warren Buffett, he certainly has the ability to do that through his Berkshire Hathaway fund. Don't believe that that would be the most appropriate thing for him, because typically he invests in publicly traded companies. But what he's basically saying here is that in his belief is that the housing market and across that whole sector, all of real estate has in effect bottomed out. Now, Mark Zandi, who is the chief economist at Moody's, also in that same article, his belief is that the housing crash is over. Now, for those of us that are in the United States, it's been a very significant event in that foreclosures are up. Certain parts of the country have been devastated by a housing market that has basically went flat. Now, if you keep in mind the law of supply and demand, all of a sudden we had an overbuilt or too much supply of housing, and what happened is that demand fell off, so now all of a sudden you have housing that starts to come down in value. But what happens is that ultimately housing will get to a certain price when buyers will now come into the market and begin to buy those houses up, taking that supply off the market, and that will begin to increase prices over time. Now, the reason that we had the housing crash is we could spend the next 2 hours having that discussion. Low interest rates, government policy that wanted more people in houses, too lenient lending criteria. Basically, anyone who could fog up a mirror could get a home mortgage. The whole idea being that it wasn't necessarily the importance of how much money you earned, but the fact that housing prices were going to continue to go up over time. Well, we know that there's no market that simply goes up exponentially into the future. Everything will cycle. And my belief, as Warren Buffett and Mark Zandi also believe, is that we have bottomed in the housing market, and so this is a very special time in the investing world where you can take advantage of this market cycle. The next piece is where do real estate investment trusts typically invest? And for the most part, you can see by the color and the sizes of this chart is that healthcare is a significant part of the real estate investment trust industry. Also, you have apartments is another significant part of it. Regional malls is a significant piece, and shopping centers. So these are just the different categories that real estate investment trusts will invest in. And another significant one is office buildings. That happens to be one of my favorite pieces of the market. As we go down through the course and the education that you'll get through course number 5, there's also what are the benefits of owning real estate. Well, first off, it's an excellent asset class that correlates well with stocks and bonds in your overall portfolio. The next piece is leverage, in that you can typically put a small amount of money down on a particular piece of property, and then you can borrow the funds in order to own that or control that piece of property. An example is, let's say you're buying a single-family home, $100,000. A bank will allow you to put down $10,000 and mortgage the other $90,000 and pay that off over time. The next thing is tax benefits. Huge tax benefits to owning real estate. We go into depth in all of this. It's an inflation hedge in that you can, if you have rental property, you can adjust that pricing over time. The other piece of the real estate investment trust course is that we show you a model of how to build a cash flow machine, as in you're purchasing a house, you have the rentals, and what you do is you increase those rental prices over time, and you're creating a nice cash flow stream for yourself. And then, of course, there is the long-term benefit, increasing your net worth through those cash flows and the capital appreciation. So there's really the 3 components, in that you have tax benefits, reducing your current tax bill. The other is building cash flow over time. And the third is, and one of the most important, and this is why buying in a market like this, it's the capital appreciation that you'll receive from that property over time. Very important concepts. The last webinar or the last course that we have will be our experts roundtable. And that's similar to what we're doing tonight, myself and Livio, in that we'll come together, we will pick a topic for the evening. We'll do 30 or 40 minutes on that topic, and then for those who are at level 6 or have purchased the level 6 course, what we'll do is we'll make ourselves available for a question and answer session, and these will probably happen every other month or on a quarterly basis, and you'll have access to all of our investment counselors. What we believe through Longevity7 is that the ongoing education is just as important as the courses that you've gone through to get here. So some of the areas that we would discuss is investing specific stocks, bonds, gold, real estate. We would have someone on that would talk about estate planning, have someone on talking about tax planning, and also trust and family partnerships. All of these are education that you can use to help depending on whatever your personal circumstances are. So we see that as a very exciting opportunity to do some discussions like this that are open, in that we can field your questions after we've presented a certain topic. So we very much look forward to that. The next item is going to be.
And let me add a couple words here, if you wouldn't mind.
Sure.
If you wouldn't mind, go back. I want to state that in this roundtable, you're going to have direct access to masters. The people that will attend these will bring information that is up to date. One of the biggest things that people tend to do is they have this concept in their mind, so they go on the internet and they look up rules and regulations on the internet on taxes or something. And the fact is, by the time they get done reading that article, the likelihood is those laws may have already changed. And so to attend these, you'll always get the most recent up-to-date information, especially when it comes to trusts or tax planning, and especially estate planning. These rules change constantly, and therefore attending these roundtables will be extremely beneficial to people that need that information.
Absolutely.
Please go ahead.
Okay. Then the next part of this is, again, the ongoing education that we will provide through our newsletters. And this happens to be the specific area that Livio is directly involved in. So Livio, I'll let you go ahead and take this forward.
Well, thank you very much. Okay, we have two newsletters. The first one we'll discuss today is the Wealth Preserver, which is the base level. I think many of you might have already touched on this, and we're going to cover the lessons here real quick. But what I want to specifically say is that this letter is specifically designed for the person who simply has never really learned about finance and investments. And over a short time, it'll take you on a journey in a language that the non-investor can understand. So some of you out there that are here that know investments will understand this simply. But those of you who do not have a financial background or do not have experience are going to be able to read this and actually understand it, from how to budget all the way to making investments. You read and you'll learn the fundamental financial lessons that have been taught since before the Roman Empire. I mean, these long-standing, forever useful knowledge, this is knowledge really that's not taught in school or not taught in traditional avenues. You'll progressively climb the ladder of knowledge about money. I'm going to slowly take you step by step by step through this. In fact, I'll just cover a couple topics that are ahead here in the next several months. Organizing your family records. Is bankruptcy the answer? We know some people have troubled times, but do you really have to go through bankruptcy, or is there other methods? Cleaning up your credit. Finance 101 for graduates. If you just graduated college, what is Finance 101? It's going to teach you. Setting up a budget. Do I really need a budget? Some people don't even have a budget. They don't even know how to create one. We're going to teach you how to create a budget. We have a plan, and I have a program that we're going to teach here in a few weeks. It's 21-day debt makeover. There's a lot of people who have a lot of debt, and they built that debt, and so they can't invest yet, or their investment, their ability to invest is slim because they have so much debt. They have the payments they have to make. Now, there's on the other side, everybody asks, well, what if I had, how much money do I need? Do I have enough money? If only I had money. Well, what's really important here is to recognize that everybody has money, but it's, do you live within your means? Do you live within the income you make? For example, you hear all the time about it, especially like in England and the US, and football means two different things, but both footballers make a lot of money. And yet you hear only years after their career they're bankrupt. So you have to remember the philosophy that it's not what you make, it's what you keep. And so these techniques are the techniques that are taught within this newsletter. Facing your money fears. What about your subconscious? Is that affecting your ability to gain and preserve wealth or even make it? These are the topics that are taught. And as you progress through this, you'll become more and more aware of how to invest. We teach you terminology, the investment terminology. After only a few months, you're going to understand a lot of the terminology we discussed tonight if you didn't understand it already. So that is the base level letter in the Wealth Preserver. Now let's go to the second newsletter there, the premier newsletter, which is called Global Insider's Wealth Letter. This newsletter really is the ultimate knowledge in power as far as I'm concerned. Let me explain why. First of all, you'll already be receiving the Wealth Preserver, right? But with the Global Insider, this is where you'll exponentially learn how to grow your money. Even if you start from little to nothing, did you know that today, in today's economy, even if you have very little, you could start for as little as $25 investing, and you can build it to $25 million with additional money added as you grow. So it's not about how and where you start, it's about continuing. You're going to be updated on what's happening on the economy with a market review and financial markets in the previous month or maybe a few months back. Then the next article, there where it says Market Forecast Assessment, is going to cover the economic impacts of those previous months' action. And knowing this puts you in front of the class. And when I mean class, I mean you'll have information that only maybe 5 to 7% of all investors worldwide have. Going back to the economic model we talked about, it's going to teach you all about that. Where are we in that economy? Where can I make money with the money that I have invested? Should I be in that market? When should I be in? When do I get out? You'll have that type of information. Now, what we then do is we give you a system, a trading system in this version that no matter which country you live in will tell you whether you should be in or out of that market. It's already completed. The guidelines are stated. All you have to follow is that system. Here's the best part. Because these newsletters are financial in nature, they are tax deductible as an investment expense. In addition, our tax section of the Global Insiders newsletter is going to teach you many 100% legal deductions that you can take for being self-employed, for being an investor, that most people have no clue even exist. What am I trying to say here? Basically, I'm saying is if you upgrade from a Wealth Preserver to a Global Insiders Edition, the likelihood is that Uncle Sam here, your government, is going to help pay for your entire monthly subscription cost by using the deductions we teach you in this newsletter. What's even better is that the software and all the educational packages that Jim already mentioned, all qualify for these deductions as well. Thus, it's likely that at a minimum, you're going to get help paying for these products from the government, along with the fact that the money you make using these vehicles. So it is extremely important that you take the benefits that you learn out of these newsletters and out of the packages and apply them. And that's what our newsletters are about. Teaching the lessons from the beginning to the end so that you can take advantage of the market and put that economy in your pocket. And that's what our newsletters are about. Back to you, Jim.
Okay. Wow, Livio, thank you very much. From that perspective, the newsletters will go like this. Let me just back up here for just a second. This basic monthly newsletter everyone that has the basic subscription will receive the Wealth Preserver newsletter. Our goal is to have that to you on the first Friday of every month. So everyone will receive this basic newsletter. Those of you that are Premier, in addition to the basic newsletter, you will also receive roughly on the third Friday of every month, you'll receive this second newsletter. We space them apart just so that you're not overwhelmed by the amount of information coming at you. Sometimes they might be 10, 12, 15 pages, but the thing about it is it's very important information that you can spend maybe an hour or so going over, and what it will do is it will simply reinforce some of the education that you got from the previous courses. And as Livio had stated, information certainly estate planning guidelines written by our government will change over time. Tax law changes, estate planning law changes. The types of items that are tax deductible will change over time, and those are the things that Livio and his team will be incorporating into these newsletters. So it's very important, one, to just simply go through them, be sure that you're up to date on the information, and then we will be reinforcing many of the important items in the webinars that we do, which is part of course number 6. Now, so basically those are all the items that we have available for you at this point. We do have a few things that are in the works. Longevity7 is working with our legal team to develop a hedge fund, which is something that we believe will be very appropriate as you get more and more educated from the side of where might I want to invest some of my assets that I grow through income through Longevity7. Well, what we can do is help you using the hedge fund, which will be along the lines of investing in markets, fixed income, and those types of products. In addition, we're working with an international real estate investment trust group that will provide us with a real estate investment trust. Now all of a sudden you have, for some people, they might want to be very hands-on in the investment decisions that they make. What I have found in my investment history, and I'm sure Livio has seen this also, is many times people know how to earn money, but they're not sure exactly what to do with it once they have it. So by going through the questionnaire where you develop an understanding of yourself psychologically, or emotionally, what kind of an investor am I, conservative, moderate, or aggressive, we can then help you with some of those investment decisions either through the hedge fund or a conservative method through the real estate investment trust. And so we look forward to bringing that in a webinar similar to this somewhere in the near future. And that will be the last part of the presentation. We certainly appreciate all of you coming and being a part of this. And if you need more information about Longevity7, who we are as a group, or information about the products, the income opportunities, go to our website, as you can see, or equally as important, go to the person who invited you here tonight so that you can have someone to discuss some of these concepts with and get a better understanding of what Longevity7 is doing to educate you going forward. And as you can see up there at the top, a significant importance to me, knowledge is power. And the more that you understand about economics, investing, financing, real estate, portfolios, diversification, allocation, all of those types of things, that knowledge provides you the power to make good decisions going forward. That's more or less to reinforce some of the items that Livio was stating earlier, is that knowledge is going to help you to be a better consumer, a better investor, and all the way through, whether it's retirement or a taxable account or whatever the case. We'll do everything that we can to provide you information. And Carmel, at this point, I think we're done with this, and if we want to open it up, if there's any questions, Livio and I would be happy to field some of those.
Great, Jim. Absolutely fantastic information. Excellent. I can see that everybody here is, in awe, literally, because the information provided in the products, in the courses, and the newsletters it's just gold, really.
Good.
So if there's any questions, you can post them in the text chat, and Jim and Olivia would be happy to answer them for you. All quiet.
Wow. Maybe we either overwhelmed them or we answered
Right.
every possible question that could be out there.
Shell shocked, yes.
Maybe, what we'd be happy to do is, if there are any questions and people want to send those in, we would also be happy to respond to them, through an email or whatever the case. Because sometimes, again, Livio and I, we're not here to make specific recommendations. That's not our role. At this point, what we're providing is education, helping you, again, to be a better consumer, a better investor, and so forth. Sometimes specific information is required in order for us to provide some guidance. And that's what we will be doing when we get to the webinar series in course number 6.
I want to add something to this, if you guys don't mind. These are very difficult times in different parts of the world, specifically in Europe. These times, there are people who have questions. They're wondering what's happening. Why is this happening to us? And they question themselves. I didn't prepare properly, or I didn't. Maybe I should have done this, and they feel guilty or they feel out of control. The fact is that it's not a right or wrong. It's not a guilt, something somebody should feel guilty about. It is what it is. And as I've always told my investors, when the market goes up and the market goes down, it isn't a good or it's not a bad thing. It simply is what it is. You have to understand what it is. And when you become aware of these items and have learned what it means, the next time it happens or comes around and the next cycle starts, you know where to be prepared for that next cycle. And this is why knowledge is power, is because once you have gained that knowledge and you're in Greece or you're in Spain and Italy and at this time, and you see things coming your way, you can recognize them and you can prepare properly because you've learned the cycles. You've learned how to benefit or avoid those cycles. It is knowledge, and it is neither right nor wrong, bad nor good. It is just what it is. And when you have that knowledge, you can take advantage of that. And that is the key to understanding that what you're going to learn in these courses, step by step, is the knowledge to not be placed into an environment that may hurt you. You may benefit from all situations in all economies. Being at the right place at the right time is knowing where to be because you know where the economy is at. And that is what is so powerful about the information you're going to gather here. So I think that when I listen to Jim as he goes through this, his knowledge is amazing, number one. And the points that he makes here through this and the packages that we provided are simply a step-by-step program that by the time you get done with them and you've gone through them, you will be aware of where you're at in your economy. And you will be able to look at that economy, become aware, and be less fearful and more in control, because without that control, fear ensues. And then when you don't have the knowledge, you may be devastated, when in fact, you don't have to be. So to take advantage of this knowledge is vitally important. It's probably, of all the information that's available on the market today, this information is the most important, because the cycles that are occurring right now in Europe may come across the sea to us here in the United States. We need to be aware of this information and put it in action. And so I just appreciate the way this has been put together, and I'm honored to be part of the newsletters to help deliver the message that can save thousands and thousands, if not hundreds of thousands of people their wealth.
And
As
Livia,
I've grown up, I've learned one thing. Yes.
sorry to interrupt you.
Yes.
I was just reminded what I was thinking earlier while you were talking. You know, the key to this is, you know, people around the world don't have this knowledge. This is why, you know, this is why these products are so key. Because if the people are thinking that they cannot get out of the situation, the circumstances that they find themselves in, right? They don't know they can,
Right.
because you just mentioned earlier that, you know, people have a lot of debt and they think they don't have money to invest, right? Because they have to pay off all this first. So they don't have a budget for investing. But if they learn how to do it, they actually can get out of the situation faster than they can think they can. Is that fair to say? It's just they need to
That
have
is
this knowledge.
extremely fair to
Yeah,
extremely fair to say. And the funny thing is, it doesn't take that much.
right.
It really does not take very much to take yourself from the end of the line and to put
Hmm.
yourself in the front of the line. And again, it's information. You know, I like the old saying, you don't know what you don't know. And until you've learned it, then you know it. And
Hmm.
sadly, this is probably one of the most important factors in a person's life is learning how to be uh, or how to manage their money, how to manage their budget, how to manage their investment life. And it is so powerful that it can affect not only them, not only their families, but their prodigy. And that is the vital fact that we have here. That is the power of what we have. We have the power to affect not only our lives, but our prodigy. And all that is based on information that is available right here, right now, and packaged in a way that is simple and easy to understand and that grows upon itself. So I'm just privileged to be able to help uh, others gain that knowledge.
Very good. Livio, along that line, the other piece of this is that it doesn't matter where you are economically, whether you're young and you're working hard to make your living, or if you're a little bit older and you're starting to put a few dollars away, or if you've been around for a while and whatever it is that you do for a living, you've already put some money aside, yet you're not exactly sure what to do with it. The information that we put in these courses will help anyone anywhere along that spectrum to know and understand a little bit more, again, about investing, economics, and so forth. So if any of you here are in discussions with people who happen to be very well on the very wealthy end of the spectrum, the fact is that this information can still be helpful to them too. In my past 15, 20 years of helping small business owners and institutions, what I have found is that people many times know how to make money. They don't know what to do with it once they have it. And the worst thing that you can do is, depending on your perspective, the worst thing you can do is to simply put it in a savings account, certainly in this market that we're in today, when you're going to get less than 1% annually from a CD or a money market account, and inflation continues to roar ahead. What that means is that the purchasing power of those dollars in that savings account becomes less and less and less. That's a simple risk that most people just simply don't understand. And again, part of the information that you'll get in these courses is understanding how inflation can eat away at your purchasing power. And that's why what you have to do is invest in things that will keep up with inflation, or better yet, uh, be ahead of that inflation curve. Real estate certainly does that. The stock market certainly does that. Gold and silver can certainly do that. So understanding these areas, and again, regardless of where you are on the economic spectrum or the education spectrum, we believe that we've put together a certain package of knowledge that can help anyone along that spectrum. Carmel, I think that if we don't have any other questions or anything, maybe that might be a good
Yes.
place to end for tonight, and we
Yes,
would be
it's been
happy
quite a
to.
long
Yes,
call, so
yes, it
I'm
has.
aware of people stayed for,
Right,
the whole time
exactly.
of it, so it's good.
So
Okay.
if what we could do is maybe in another couple of weeks, if we wanted to have another one of these types of course information type of calls, we would, I believe, Livio, I'm sure you would be open to that type of a webinar series again.
Absolutely. Absolutely.
Okay. All
Great.
right. So we would look forward to having that opportunity. Everyone, we appreciate your time tonight and taking the time to be involved with Longevity7. And Carmel, we appreciate you being here with us also.
Thank you, Jim. Yeah. Okay. Well, we'll say good night because it has been quite a long call. Very, very good though, and I'm sure everybody is so excited. So if you are new to Longevity7, make sure that you look out for the update emails and keep in touch because we want to make sure that you get all the information just like tonight. Very, very crucial information for you all. Okay, thank you so much for attending and we'll say good night.
Good night.
Night.